Hello, going to be combining a couple videos here together as I'm in my last day here at Yosemite. Going to be traveling tomorrow, but internet's limited, so going to get it all done in one video. We're going to look at SPY, IWM QQQ, tech sector, financial sector, and then a bunch of individual names. So starting with SPY, again, we're still in this chop range, and we've been in here a lot longer than anticipated, but at this point, we're really between 270 and 274 for the last 10 days, and we have an inside bar to be watching as we head into Tuesday with the holiday today on Monday. But we're going to be watching for a break of this inside bar. 271.58 is a bear break. 272.86 is a bull break. We need to close above 274 for a bull signal and close below 270 for a short-term bear signal. And I say short-term because it's going to take a lot more than that to shift the momentum away from the bulls. That will just be step number one for the bears to start to shift that momentum. So SPY on the weekly time frame, still holding the back tests of the moving averages, consolidating a little bit, and they're going to be looking for continuation. And it's essentially an inside bar this past week, not exactly, but only by 15 cents, was it not? So still watching an extremely tight range. Personally, no swing trading for me ever really, but I wouldn't be swing trading in this channel until we get more clarity because it's just choppy back and forth action. Looking at IWM, it's certainly more bullish overall. Our low of consolidation is 160.62. Inside bar here as well to be watching, and we're just watching to see, can the bulls see continuation back towards the all-time high, or are we going to break 160.62 and need to see further daily consolidation? Weekly time frame, bearish reversal candlestick rejecting from the upper Bollinger Band, and historically this upper Bollinger Band has definitely given the bulls trouble even at all-time highs in the past, so that is worth noting. We could be in for some healthy consolidation, and losing that 160.62 level will be a signal that further consolidation is needed for IWM. QQQ also in a range here, so support of 167 essentially, upper 166s, and we got resistance at 170.82. We're closer to a bull break than we are to a bear break, but again, a lack of clarity this past 2 weeks with a lot of choppy action. Need to see a bull break of 170.82 for more convincing follow through, and the bears need to see a break of 166.88 for a clear bear break. The weekly time frame also still favoring the bulls. Very healthy consolidation after the break of the equilibrium pattern, and watching to see if the daily equilibrium, or I should say the weekly equilibrium, can get that, or the weekly MACD cross. We'll see if that can get that bull cross. So checking in on the tech sector, very similar to QQQ, we have pulled back. We're in a tightening range, pretty much a quadruple top the last 4 days, 69.91, 88, 94, and 70. Bulls need to break 70 and 70.42 for continuation, and the bears would want to see a break of 68.81. Again, every chart that we've looked at so far, the bulls have control. It's up to the bears to prove themselves. They have not done so on any of the time frames at this point. Weekly time frame for the tech sector, potential bull flag. The psychology is absolutely here right now. All-time high, healthy consolidation, unable to break the right side, looking for a handle of pullback, and if we get continuation to a new all-time high and a breakout, we'll get a bull MACD cross along with it. Financial sector has been struggling after the FOMC, and we have the daily inside bar to be watching here as well, but much closer to a bear break after 276 or 27.66. The next level we're looking down at is 27.46, on the verge of a bearish MACD cross on the daily. The weekly time frame has rejected 4 times now on the back test of this middle Bollinger Band, and we have essentially the base of support down here in the $26 range and this middle Bollinger Band resistance to be watching. Bulls need another higher low and higher high to continue to shift this momentum back in favor of the bulls, but this weekly middle Bollinger Band is definitely worth watching. Tesla on the daily time frame also trading sideways, extremely tight. Inside bar to be watching Tuesday, 275.61 support, 279.64 resistance. Exponential resistance on the daily chart has been rejecting the price the past 2 weeks, and the lower Bollinger Band has been supporting the price the past 2 weeks. So watching very close as the volume drops off, we should see a clear bull break, which would have us looking up to 291.94, or a clear bear break, which has us entering an area of a lack of support and would have us looking at the lower Bollinger Band as the next level if we do get that bear break. The weekly time frame for Tesla showing weakness, inability to follow through after that little higher low and higher high, and a big time pullback, rejecting from exponential resistance on this bounce attempt last week. Bears have favor on Tesla, and out of everybody we've looked at, it's the bulls who have to prove themselves, which is a bit of a different scenario. CMG also got a bear break of the 430 base of support, still held the daily middle Bollinger Band. The real red flag, that's the early red flag if 430 broke. The next real red flag is going to be if 422.67 breaks, as that was the last daily higher low, and the middle Bollinger Band will be lost if that daily level is lost as well. Weekly time frame, not a whole lot of range this past week, not a whole lot going on, and just a lot of sideways trading with the Bollinger Bands getting really tight. Bears have a bit of favor here just because that momentum was favoring the bears with a spike, shouldn't say a spike, a little slight increase in volume on Friday. but it's going to be up to the bears to prove themselves here as well, because we do have a couple bases of support that we have seen on this sideways action that the bulls have enjoyed slow and steady over the past month. Weekly time frame just went over. BKNG bull break finally. So we had a triple top at 2100, a clear bull break over 2100, and now if we can get over these moving averages, there's a gap to fill at 2158. So that's the target for the bulls, with an increase in bull volume, a bull MACD cross looking to follow through, and a pretty decent close. And obviously, if the SPY bulls can break their resistance and get over 274, BKNG bulls are going to be looking good to get up towards that gap fill. Weekly time frame, trying to hold this equilibrium. We have the all-time high, low of consolidation, lower high, higher low, and we will be looking for a lower high compared to 2201 if the bulls do get this follow-through up towards filling that gap. Netflix on the daily time frame, all-time highs, following through in a big way with big bull volume up above the upper Bollinger Band. A little bit of a double top at 354 Thursday and Friday. So if we do see a break of 348.83 on Tuesday, then we will have a double top to be watching, and we'll look for daily healthy consolidation, but a significant follow-through move for the Netflix bulls, and still very much in control on the daily weekly time frame after the 354.36 all-time high, 355 360 psychological resistance levels to be watching. Netflix leading the way for the tech bulls, and now the question is, can these other individual names like Apple, Amazon, and Facebook, can they make their way back to their all-time highs and give that XLK potential weekly cup and handle pattern a reason to break out to all-time highs as well? So Netflix leading the way, other names have to do so as well. Google, definitely the weakest of the 5 major tech names that we follow, struggling at the 100-day moving average resistance literally every single day this past week. Have to close over that level. Key resistance 1093 needs to break, and support is down at 1067. That's the current range to be watching. And again, not a whole lot of action going on. You can see Google on the weekly does have a little higher low and higher high, but compared to where the weekly charts sit on all those other tech names that I just mentioned, Google is still a big time laggard. Inside bar on the weekly time frame to be watching this coming week, and need that break of 1093 to see that follow through and a bull break of this inside bar. So that's where we stand heading into this coming week. Bulls have favor in the vast majority of instances. Has to see the bears prove themselves by breaking key support, and we're going to be watching SPY with those very clear 270 and 274 levels this coming week. Thanks again. Back to normal tomorrow night. I'll be back in. So Wednesday, back to normal routine. See you then.